You spent 12 years in school. You learned algebra. You learned the names of rivers. You learned how to dissect a frog, but nobody, not one single teacher, ever sat you down and taught you how money actually works. And before we go any further, I need you to understand something. That was not an accident. The financial system was not built for you. It was built around you. There is a difference. A system built for you would have taught you the rules before you entered it. A system built around you just needs you to participate, to borrow, to spend, to work, without ever understanding why. Because the people who understand the rules are the ones who wrote them, and they wrote them to win. The first thing they never taught you: the difference between income and wealth. Income is what you earn. Wealth is what you keep and grow. Most people chase a bigger salary their entire lives, while their expenses grow with it. The person earning $2,000 who saves and invests will end up wealthier than the person earning $5,000 who spends everything. Income does not make you wealthy. What you do with income makes you wealthy, and nobody taught you what to do with it. The second lesson, the most important concept in personal finance, the difference between an asset and a liability. An asset puts money into your pocket. A liability takes money out. Your car is a liability. Your credit card debt is a liability. Your phone bought on contract is a liability. An asset is a share in a company, a property that earns rent, a business, something that works for you while you sleep. Rich people spend their lives buying assets. Everyone else spends their lives buying liabilities and calling it success. Third lesson, here is what your bank actually does with your money. When you deposit $1,000 into a savings account, the bank does not lock it away for you. They lend it out, sometimes 10 times over, to other people, at interest rates of 12, 18, even 24%. They pay you 4% to use your money, then they charge someone else 20% for that same money. The difference is their profit. You are not a customer to your bank, you are a supplier. You are the raw material that they use to get rich. Fourth lesson, inflation. Every year the cost of everything goes up. Food, rent, transport, school fees. If inflation is running at 6% and your savings account is paying you 4%, you are losing 2% of your money's value every single year, without spending a single dollar. This is why saving alone is not enough. Money sitting still is money going backwards. The only way to stay ahead of inflation is to make your money grow faster than it. And the only way to do that is to invest, which nobody taught you. Fifth lesson, compound interest. You may have heard this word used positively as something that grows investments. But compound interest is a knife. It can work for you or against you. When you carry a credit card balance and only pay the minimum, compound interest works against you every single day. A $5,000 debt, at 20% interest, paid on minimum, takes over 25 years to clear and costs you more than $18,000 in interest on $5,000. The bank does not need to rob you, they just need you to keep paying the minimum. But here is where everything changes. Because now, you know, and knowing is the only thing that was ever standing between you and a completely different financial life. The system works because most people never look behind it. You just looked behind it. So let me give you the exact steps to flip this system in your favor. Step 1. The moment your salary arrives, before you pay rent, before you buy groceries, before you do anything at all, you take a percentage and you pay yourself first. Even $100 a month, even $50 if that is all you can manage right now. This single habit separates people who build wealth from people who never do. Most people pay everyone else first and save what is left. There is never anything left. Pay yourself first. Make it automatic, so you never have to decide. Step 2. If you have debt, attack the highest interest rate debt first. Not the biggest balance, the highest interest rate. Every extra dollar you find goes onto that one debt until it is gone. Then you move to the next one. Every dollar of high-interest debt you destroy is a guaranteed return equal to whatever interest rate that debt was charging you. This is called the avalanche method, and it will save you more money than almost anything else you can do. Step 3. Once you have cleared your bad debt and built a small emergency fund, every extra dollar goes into investments, not a savings account. Investments, an index fund, a tax-free savings account, shares in businesses that grow, $100 a month, invested for 30 years, at an average 10% return, becomes over $200,000. You did not earn $200,000, compound interest, now working for you instead of against you. Built it. Time is the ingredient. The longer your money is invested, the more powerfully it grows. The financial system is not complicated. It was made to feel complicated, so that you would hand control of your money to people who benefit from your confusion. You now know more about money than most adults who have been working for 20 years. The question is not whether this information will change your life. It will. The question is whether you act on it today, or whether you let it join the long list of things you knew, but never did anything about. If nobody taught you this before today, make sure someone you care about sees it. Share this video, follow for a new money lesson every single week, and save this one, because the second time you watch it, you will catch something you missed the first time.